What is going on, traders? Welcome back to the Traveling Trader. So the bull market, the 11-year bull market that we were on is essentially over, and we are now officially in a bear market. What is a bear market? In loose and fast terms, a bear market is a decline of 20% or more. It's usually defined over a longer period of time than a few days, but we've dropped so much in a few days. And the short-term future doesn't look so bright, especially with the oil war going on between Russia and Saudi Arabia, as well as the acceleration of the coronavirus outbreak. So what does that mean for us as traders? How can we take advantage of such a situation? Obviously, every trader or investor is going to have a different risk profile. Everyone is going to have a different aptitude level. Some people don't even know how to short or play options. Some folks are more risk averse than others. So I totally appreciate that this isn't a one size fits all type of scenario. But there are some things that you can do regardless of what type of trader you are. And I'm going to give you some ideas today on how to handle a bear market or a crash regardless of the asset class you're in. This applies to stocks as well as crypto, because as I'll show you today, the Bitcoin market and the stock market are inextricably tied. This market crash proves that the correlation is there. So let's go over to the larger screen and I'll show you some examples of how I've been playing the bear market, some things that I've already done to protect my long-term portfolio, as well as profit heavily in the short term through speculation on the downward direction of the overall market. So let us get right into it.
So let me just get the obvious out of the way. Over 100 years of market data tells us that if we just stay the course, over the long term, the market will continue to hit new highs. Now, whether that takes a year, whether it takes 3 years, different crashes, different recessions have had varying recovery periods. Some have taken less than a year, some have taken a couple of years. But for those that don't need money ASAP and have a lot of assumed time ahead of them, right? Like time left to retire, for instance, then you really don't have to do anything if you don't feel like moving your money around, or you just don't want to deal with the headache, or you might have a 401k and you just want to keep on building up regardless of what the market is doing in the short term. You know that in the long term, you'll be fine. For those that have a little bit more control of their money and don't mind moving their money around a little bit, you can obviously go into cash or bonds or some combination thereof. I use the Acorns app for investing long term. This isn't a plug. I don't even have an Acorns referral code. I'm just saying that I use Acorns. You obviously would probably be using something similar, or maybe a brokerage account. But yeah, essentially once the market started tanking, I moved my money out of the stocks that I was in and put them into bonds. Now, as you know, the bond yields are terrible right now. If we take a look at them, this is the monthly chart on a 10-year bond going all the way back to 1980. And you'll see that the bond yields are at all-time lows right now. Now, it certainly still will give you more money than what your bank would give you for a savings account. And it's certainly better than losing money, right? Like gaining less than 1% is better than having your money in the stock market where, the stock market has lost. If we just take a look at the S&P, for instance, just a quick calculation, the stock market has lost 25% already. So, it's certainly better than that, but bond yields are at an all-time low right now. Still something to think about. And obviously you don't have to buy a 10-year bond and stay in it for 10 years. Like I said, on an app like Acorns, if you pick a conservative portfolio, it will automatically allocate your money into short-term and long-term bonds. And you can reap the benefits of not having your portfolio tank, while the market is figuring itself out. And you can obviously change your portfolio category when the market starts to recover. So those two are a couple of conservative ways to go about your portfolio. I know the first one really sounds like doing nothing, and it is doing nothing, but basically waiting it out for the long term. The second one, allocating your money into cash-based investments or bonds or a combination thereof. Now we get into the really fun stuff. So the third thing that you can do is obviously short individual stocks. Now, right now, the market is, like I said, we definitely hit a bear market. We are down 25%. That is an official bear market. Even when we had that market correction in December 2018, it's this one right here. Let me just remove one of the indicators so it's easier to see. But this right here was just shy of a bear market. Now, you can't tell me that, with a virus outbreak, with the oil war between Russia and China, with the decreased production in China, with the decreased imports of oil, with the decreased outputs of things like iPhones and Teslas and other manufactured products. I mean, the world is definitely feeling the effects the residual effects of the outbreak. So to me, in no way, shape, or form is the small correction that we had, it's small now in hindsight, the small correction that we had in December 2018, which was largely a result of the impasse between the U.S. and China. If you remember, there was the trade war. It seemed like those talks were at an impasse, and so the market took that news negatively. But what's going on now is definitely a lot more severe than what was going on then. So you can easily project more downside to come. Now, we will have a couple of up days sprinkled in between. Even if you take a look at the 2008 market crash, right? The worst crash that we've had, the worst recession that we've had really since the Great Depression. And it's this right here. This is a weekly chart. But even if you look at this, there were a couple of weeks sprinkled in where we saw 13% gains, 11% gains, even as we were dropping. As a matter of fact, I view the days that we do see rallies, that we see temporary rallies, as maximum value for our shorts, right? Once the market starts going up, those are the days that you actually want to be shorting. Let me just preface this by saying shorting is a risky strategy. It's a speculative strategy. If you don't have experience with it, be very careful. Before I started shorting, I started with a paper trading account for months. This was years ago, but before I ever committed a dollar to any short or any inverse options trade, I practiced and practiced until I was confident enough to execute real life trades. So just to preface, obviously it's your money. You could do whatever you want with it. And I'm just giving you a suggestion as to what we did and how I approach this. So all that is to say, the third thing you could do is short individual stocks. Because the market is tanking, you can actually pick and choose individual stocks based on how inflated they were before the crash. And obviously one of the first stocks I'm going to look at is Tesla. And we made a lot of money on Tesla after buying the breakout from $300. It now hit, or it did hit, over $900, and now we are seeing this is the weekly chart. We are seeing this crash here. And if you follow the trade alerts, I was actually saying on the trade alerts that Tesla is going to hit the 21 EMA, no doubt about it, the 21 weekly exponential moving average. And this was, I held that view without there being a market crash. It's just the general cycle of assets, right? Every time an asset climbs well beyond the 21 EMA, it has to go back and start retesting these moving averages just as a way of correcting itself. Even if it's going to continue to move up, it just has to retest those levels. So even without the market crash, the 21 EMA was the most likely, almost inevitable scenario. But imagine with a market crash, how much more likely is it to hit the 21 EMA, and how much more quickly is it going to hit the 21 EMA? We eventually did hit the 21 EMA, booked an insane amount on our short here. In this case, I did it with options, but just in a couple days, we booked almost 50% on this Tesla short. And if you want access to any of these trade alerts, I send them out on a daily basis. Crypto option stocks, link is in the description. And I'll just give you another easy example of what you can short right now. Obviously, the travel industry is taking a major hit, both airlines and especially cruise lines, right? Who's going to go on a cruise now? So if you take a look at something like Royal Caribbean, this is one of the easier shorts. Obviously, you see just how much it tanked. It tanked about, let me get a measurement on this. It's so far tanked 75% in a matter of a month or two. You have stocks like Delta Airlines, American Airlines. I mean, there's just so many shorts all around that one can speculate on. So shorting individual stocks. The other thing you could do is short the index itself. So you don't even have to pick stocks. This is the SPY. This is the ETF that tracks the S&P 500. This is one of the most liquid ETFs on the planet. Could be the most liquid. Don't quote me on that. Check the statistics. But this is one of the most liquid ETFs on the planet, and it tracks the S&P 500. Obviously, all of the market indices have been tanking. NASDAQ, S&P 500, Russell. Now, the beauty about this is you can buy an inverse ETF, right? So like SPXS. As you see here, this is an inverse ETF that tracks basically the exact opposite of what the S&P is doing. This is a 3x leveraged ETF. So in loose terms, any move on the S&P is magnified by 3 times here. Or you can short the SPY itself, right? Or you can do this through options, and we did that as well. If you take a look at the options trade alerts here, you'll see that just yesterday alone, another 45% gained through the use of options on the SPY. That's the beauty about the markets. They provide so many different angles and a variety of ways to make money. So if the markets are going down in general, yeah, you're going to get, less experienced traders and institutional investors who run funds for people and people with 401ks. Of course, those people are going to feel lowly about the market. But for traders, you have an endless number of opportunities to attack this stuff, right? So that is the fourth way you can tackle this, through the shorting of indices in a number of different ways. The fifth thing you can do, leverage the news. So we know that because of this, partly because of the outbreak and because of the depleted importing of oil by China, oil has taken a hit. And during that, Russia and Saudi are going at it in sort of this game of brinksmanship to see who will crack first in reducing their output. So Russia and Saudi are going at it now. Saudi is flexing their muscles, saying that they can, flood the oil market. They don't care about the oil prices. They're going to flood the oil market with as much cheap oil as possible and try to price Russia out. Russia is also taking aim at U.S. shale oil producers. So what do you think is going to happen to the price of oil? Obviously, it's going to tank the more that these countries are warring with each other, flooding the market with cheap oil when demand for oil is lessened, but they're, increasing the supply really out of sheer stubbornness. What do you think is going to happen to the price of oil? Well, luckily for us, we could take advantage of that. There is an inverse oil ETF, right? And so this essentially goes up as the oil market starts tanking. If you look at the price of the barrel of oil right now, the price of a barrel of oil is somewhere in the $30 range. Saudi Arabia just announced that it's going to price its oil at $25. It's going to flood the market with $25 oil. Well, what do you think is going to happen to the price of oil here? Another way that you could play the news is paying attention or monitoring the hype around the vaccine and testing kits that these pharmaceutical companies are announcing, right? So you have a company like Inovio, INO. This is a stock that we bought and sold. And if you look at it here in the trade alerts, I even have it from, from yesterday? Yeah, Inovio. I bought it the day before after we saw there's a candlestick pattern called a bullish harami, right? It's this candlestick pattern that you see here, where you essentially have a tall red candle followed by a shorter bodied green candle that the previous red candle engulfs, right? And this is called a bullish harami. We essentially bought just based off of this and the hype that Inovio was going to be the first to deliver a vaccine. And we sold it the next day because in this market, that's another thing I should point out. You want to be taking profits as much as you can and as quickly as possible. You don't want to leave anything on the table, especially with volatile stocks like Inovio that have never been at these prices, but the hype surrounding the coronavirus have gotten them to these prices. So that is another way that you can play the market, play the news. And I send all of these trade alerts out in our Discord group. Again, sign up, link is below. Lastly, I want to talk about Bitcoin. And this is something that really surprised me. But then I sat back and thought about it for a second. And this is really, if you take a look at it, this is the first market crash that Bitcoin has experienced. I'm not saying this is the first time Bitcoin has crashed. Don't write it in the comment section. I'm saying that the stock market crash, this is the first stock market crash that Bitcoin has experienced, right? Because obviously we had the big recession in 2008. We had the small correction in 2018, which I'm going to talk about because it is valid. But other than that, this bear market in the stock market is the first bearish stock market that Bitcoin has ever experienced. And it is very important. So let's take a look at a weekly chart. I'm going to remove these indicators real quick just so that it's easier to see. This is a weekly chart of Bitcoin against US dollar going all the way back to 2011. Again, well after the recession. And I'm going to pull up the S&P 500. And I want you to take a look at something here. The correlation between the S&P 500 and Bitcoin is insane. It's definitely correlated. This tells me that Bitcoin traders are also synonymous, well, not synonymous, but there's a huge overlap between Bitcoin traders and stock market traders. And the price of Bitcoin isn't really driven by network efficiency or difficulty or store value. It's a speculative asset, just in the same way that the stock market is. Even with the stock market crash here, Look at Bitcoin's crash. It coincides with the stock market crash. And this was really surprising and also disheartening, I think, to a lot of people, especially Bitcoin maximalists or crypto enthusiasts. You know, we were all hoping that Bitcoin would essentially be a store of value, protecting us against the reckless and speculative nature of the equities markets and the fiat system. But it really isn't. With the stock market tanking, Bitcoin's also tanking. And I was saying December 2018, when we saw that market correction on the S&P, again, this orange here is the S&P 500 overlaid on the Bitcoin chart, you'll see that this is when Bitcoin dropped to 3,200. Now, I do remember this data point, but it wasn't enough really to, for me to conclude that Bitcoin and the S&P were correlated. But you see it well and clear here, especially with this last drop, of the S&P. And Bitcoin yesterday just took, and, today is March 13th. So when I say yesterday, March 12th, over a 24-hour period, Bitcoin dropped 53%. So it dropped at even a higher rate than the S&P. Now, obviously, there are times when Bitcoin has appreciated at a higher rate than the S&P. So I'm not saying Bitcoin is worse than or better than the S&P. They are correlated, and at times they move in disproportionate amounts. That's all I'm saying. But they are definitely correlated. So what I did yesterday was when I saw the news that stock futures were, closed basically in the green. There was news of that, which is why the stock market opened up today in the green. Bitcoin's price was still around 4,900 or 5K last night when I did this, right? And I noticed that the futures were up. They were up about 500 or 600 points, at least NASDAQ was, but Bitcoin hadn't gone up yet. So what I did was I opened up a Bitcoin long, right, at around 5,000, because my thinking there was, okay, the Bitcoin market hasn't reacted to the stock futures yet, but if the actual stock market opens up in the green, then Bitcoin's going to rally. So I opened up a leverage long, and lo and behold, I did send this out in our Discord group as well. You could see it from last night. I said, I'm going to long Bitcoin from the 5K mark in anticipation that the stock market will open positively. And I sent this at midnight my time. I even posted the Bitcoin and S&P chart that you see here. Lo and behold, the stock market did open in the green, and I made 140% on my Bitcoin trade just based off of that. Just recognizing that Bitcoin and the S&P, at least right now, are inextricably tied. And I can't even say right now, just historically are inextricably tied. Again, moving at varying degrees or varying proportions, but still the movements are generally in the same direction. And all the speculation that we've had about, what happens after the halving, what happened after the last two halvings. I mean, now I'm thinking back, is that correlation or causation? Because the markets essentially have continued to rally after the last two halvings because we were in an 11-year bull market. I'm talking about the stock market. And so maybe Bitcoin was rallying at the same rate by the same token because the equities markets were also rallying. Like even after the last couple of halvings, if we saw a stock market recession or a bear market in the stock market, looking at the data now, it's most likely that Bitcoin would have followed suit. So in my view, unless we get a rally in the stock market, say in the next couple of months, the virus starts dissipating, it becomes less of a concern. China opens up for business fully. We're closer to a vaccine. We have, widespread tests available to be able to test whether someone is positive, is coronavirus positive. If that coincides with the halving or shortly after the halving, then, I could see the markets go up as well as Bitcoin. But right now, I have no reason to believe that Bitcoin is going to act inverse to the market in a major way. I mean, we could see an update when the stock market is down or vice versa. But, I don't anticipate Bitcoin hitting 15,000 while the stock market is still crashing. I have no reason to believe that based off of this chart and this data. Obviously, if we take a look at Bitcoin's chart and do individual technical analysis while isolating just Bitcoin, we might be able to come to a different conclusion. But in general, looking at the correlation between the stock market and Bitcoin, that is a conclusion that one can draw. And the last thing I'll say is that, the easiest way to make money in the stock market long term is to buy blue chip stocks while the market is crashing. As Warren Buffett said, be greedy when others are fearful, right? So, do we really believe that Boeing and Microsoft and Nike and Amazon, do we believe these companies now have worse fundamentals just because of the viral outbreak? Or do we believe that, their price decline is in response to the hysteria surrounding the potential demise of the global economy, right? So there will definitely be a time when I start loading up on those stocks, on Microsoft, Disney, Amazon, Nike, Coca-Cola, Lululemon, Google, etc. I mean, there's just a wide variety of stocks that one can buy. Obviously, you can also invest in an index when the market looks like it's on path to recovery. But right now, I do believe that there is still more blood to be shed. And I mean that figuratively, you sickos. But yeah, hopefully I provided you with some valuable ideas of how to tackle a bear market. Leave a comment if you have a question, agreement, disagreement, etc. Subscribe if you got anything out of this video. If you're already subscribed, leave a thumbs up. Even if you're not subscribed, leave a thumbs up. Sign up to the trade alerts if you want access to all these plays that I send out. You also get to chat with our trading group. It's a group of over 500 traders that you get to chat with. We talk about strategies, ideas, how to handle different markets, analysis, stock picks, crypto picks, etc. So sign up. Link is in the description. If you'd like to learn how to trade options or how to short the market or need one-on-one time with me, that same link is also in the description. I only take a handful of people every month, so hit me up before on the Discord and let me know that you're interested for the following month because I'm maxed out right now. Stay safe out there, traders. Peace.